Well, good day, all. I'm Epstein, and here we are with your SPDR-ETF stock market wrap-up. And this wrap-up is for the evening of Wednesday, and we're sitting here now at the 5th of June, 2024. All right, again, Nvidia. And my gosh, when you take a look at some of these markets, Nvidia up $60 a share today to $12.24. Jaw drop. It just carries basically everything with it that has been coming along, and that is still the case that is going on. You're getting rallies in the TLT and BND. What took place today is, as you know, we had a weak JOLTS number yesterday, and we had a weak set of numbers from ADP. Normally, people don't pay a lot of attention to ADP, but everybody's so sensitive to the jobs and looking for them to roll to the weakness, and from that, hoping that the CPI and PPI roll behind it, that gets the market rolling over, and you get interest rate cuts, and you take off some of the restrictions. Do remember, it's a two-step dance. Number one, don't always hope for the worst, because the reason the Fed will be cutting is because they're seeing the economy coming down and they want to cushion the economy. Got that? That's what's going on in the Bank of Canada. They cut their rates today. European Central Bank's going to cut its rate tomorrow. There's a reason this is going on. There's a reason copper fell, if you think about it, because other than the squeeze play that carried the market up for April into May, and when it finally peaked out, well, we knew we were going to get deliveries against it, but apparently that stretched the market out much too much. And that's become problematic for the market. So is Dr. Copper saying economies are going to turn down? I don't know. But if you think I don't have an open mind to it, you'd be very foolish. I have an open mind to almost anything. Microsoft finally came alive today. Again, rising tide lifts all ships. Boeing. I keep telling the clients in my morning subscriber video, guys, you got to pay attention to this stock. On the next whatever event that sends it down, you want to be looking at it. It's finally time to say the worst is behind it from a financial perspective. AMC up. Well, that means GameStop is up. I can just tell you, they are umbilically tied pretty much. And today, another high, another $5 gain. If you were to ask anybody why, they can't answer it to you at all. This is one of those meme stocks, and they just take off. That's all that it is. All right. So you got a $3 trillion Nvidia. Yeah, that's the valuation, about even with Apple. Would you have ever thought that a chip maker like that's going to be the size of Apple? But there you are. Wow. All right. Let's call that actively managed exchange traded commodity fund, PDBC. Well, you can see how the market came down, got a little bounce. Well, it's bouncing because you got a bounce today in some of the metals. You turned back inside of the Bollinger Bands after a big break in the energies, but this is a sick chart. This isn't bullish at all. You've got a higher high and lower low. You don't get breaks like that out of left field for no reason. And the market's was under the Bollinger Band. I expected it to get back. It did. And now it's got to fight at the 100-day average. And watch out here, because the 18 looks like it wants to crisscross under the 200-day average, which would be bearish again. As I said, you're at the Bollinger Bands trying to now stay within them, and you're oversold. Nothing there. So it was neat to bring up, but commodities have fallen in grains. They have fallen in the metal markets. You've seen other parts of it. The soft markets, a little bit of everything. Cocoa certainly soared, and coffee did, but cotton came down pretty good. So the weighting is there to be a problem. We then look at Walmart, and these are new highs. So certain retailers, Costco, Walmart, they're just firing away here because people are becoming careful with their money. They always have been, but more so now. And watch that. Tesla, the big argument here. What's going to happen to this company now? What happens if on the vote, which is right around the corner, today's the 5th, so in 5 days or so we get that vote. And by the way, going to Nvidia, keep in the back of your mind, I think you got the developers conference coming up. So we'll get another story as to what they've got planned. We know what the Blackwell and the new chip is going to do. Now where's that going to take everything? And FCX, okay, Freeport. Well, I do think, and I said it yesterday, I think you're probably at an area here where the market's going to fight for its support. But I want to repeat again, this market surprised me. I thought it was going to hold better at the 18-day average. I thought COPX would hold better. They did not. And as a chartist, take the name off the chart, throw what you think of the underlying fundamentals. There's nothing bullish there. Same in UGA, the gasoline fund. I know everybody's driving, so what? Does this look to you like a bullish chart? Does it look like it's got a base to work from? You can get bounces. There's nothing bullish on that chart. So we go to the financial sector, and are cuts in interest rates bullish or bearish this sector? You got to tell me, because that's what this market's fighting. It's void of a trend. If rates fall, is that better for the financial services? Worse for them. And the market can't seem to make up its mind. It's caught literally, and it hasn't even hit the lower band, but it's caught in that zone to the 18-day average of closes. In the industrial sector, we get bounces, but nothing in industries looking on fire. Will rate cuts spur industry? That's going to be another thing that the market has to deal with. But you don't have to be the bottom picker. Does anything look bullish to you on this chart? I can see the pros have covered shorts. That I do think. Oversold, hitting the Bollinger Band, can't get under the 100-day average. Let the next guy have the next leg. But what do you do next? That's the problem. Then we come to the RSPD, and everybody says the consumer's dead. Well, you had an outside day to the upside. How often do you hear me say, and I did it all week, you're fighting a battle between the 100-day and the 18-day average, and if you can extend up, maybe you'll get to the upper band, but you're overbought, outside day up. You should not take out today's low on either Thursday or Friday. If you do, your horns, your back of your hair on your neck should stand up and you go, I don't think I want to be here. In the home builders, well, is this it? Is this where we're going to see a 4.3 rate on the 10-year? Will that finally get mortgage rates to come down because it's hurting them? Now, not everybody's building million-dollar homes. There are people out there that buy a lot less. There are spec homes, as we know, that are being built out there as well. So it has an impact. I told you that I don't think there's a lot of downside here, and I'll stick with what I said. But there's no reason to be a buyer. I can see reasons not to be short. I can't see reasons to be long. Next, we get to the energy sector. Same thing here. Now you're at the zone where I don't see the advantage in holding on to short positions right here. Market coming down, think out loud. Okay, European central bank's going to cut rates. Canada cut rates. They want to spur on economies and they want to cushion any decline. Will that mean more energy usage? That's how you got to think to yourself. It may not, but it may not mean less. So you got to understand where you're at. I'm going to repeat. I think that OPEC Plus blew it. They should have said that come October, conditionally, they're going to release 750,000 barrels a day more gasoline between the members. The word conditionally, don't define it. Instead, they said they're going to do that starting then, and that broke the market because the market's just looking at additional supply. When I look at the gold market, I think that the problem here is the market needs to get back over the 18-day average to be bullish. There isn't a trend. You have a higher high and a lower low. You're just rocking back and forth. This is the time of year where normally silver on a historical basis weakens compared to gold. Wish I could tell you why. I can't. I can tell you what the charts normally do, and that's what they typically do. The trend is down, but where would you possibly go short? You're going to put a stop all the way up there from here? That doesn't make sense to me. And in the copper market, you know, I'm a guy that bailed back here. I said I'm wrong. And that's exactly, well, actually, yesterday was the final day I threw in the towel. It was right here that I said, if it closes under 45.70, I don't want to be out any more money. Let the market do another move and we can come back to it. And I was wrong, okay? So, you know, I come out here and there's enough when I'm right. I'm not worried to be wrong a trade or two, but I'm not going down with the ship. In TLT, lower down to the Bollinger Band, one of these vertical price moves. These rarely last, so be very careful. They have a way of correcting. You're over the upper Bollinger Band going into the U.S. jobs report. Little caution, that's all I'm telling you. And I think it impossible unless you answer my question. Again, Canada cutting rates. We have the European Central Bank. Is that make their currency weaker or stronger versus the dollar? This is the battle being fought right now in these two. And we're going to have our answer probably within 48 hours. As I'd like to get through the jobs report, and then I think I can give something of how the market interprets that. So I look at it, these two, and you can just see where your battle is. So you put it together, you try to come up with game plans, as you know. Now, tomorrow, remember, you got the Challenger Group. They're going to come out with their employer job cuts in the morning at 6:30. We're going to get the European Central Bank announcement, I think at 7, and then Ms. Lagarde normally on by 7:20 or so with the press conference. April trade balance data at 7:30. Jobless claims at 7:30. We're going to get the revised non-farm payroll. So it's the second, it's a revision. It's not the first and original number. And we'll be getting the EIA numbers. And of course, be on the lookout because you're going to start that developers conference that Nvidia it's going to be important, and what are they going to bring out of all that? So you have your hands full, to put it mildly. There's an awful lot to choose from. One other choice you might want is if you want to learn more about charting. We've got our volumes 1 and 2 that we made into a PDF of all these neat little parts that were put together. They're different ways of looking at it by different authors, but it's so darn good. It's been a mainstay of what I have used forever. When I tell you forever, believe me, I don't need to see the other ones. I compare it all the time. I go back, I review what's here. I think this is it. And this was written by some really neat people. I helped put it together at Futures Magazine, and I'm talking decades ago. And they allowed me to use it. Modern Trader had taken them over, and good people allowed us to do all that. And I'd like to give it to you. Obviously, money management's a key principle because you can be wrong, like I'm just saying. There's nothing wrong with taking a $2 loss. There's a lot wrong with where you could have got out with a $2, you ran it into a $10. That is terrible. Got to be careful. To get this, all you need to do is either call my staff. If you go online, iraepstein.com, free offers. Your cursor's up here, and free offers when you get to the website. The cursor will take you right into that area if you give that a click. I'll see you in the morning. Take care.